Well, it's possible that the Fed starts the process of tapering, but what I think is impossible is that it actually completes the taper, because the idea is to continue to reduce the monthly purchases, to taper them until the Fed is no longer purchasing any government bonds or mortgage-backed securities at all. And I think that journey is impossible to complete. I think before long, the Fed will not only stop the taper, but reverse the process. And ultimately, the Fed will be buying more bonds and mortgage-backed securities per month than when it began to taper. So right now, we're doing about $120 billion a month. Actually, it's a bit more than that, but that's the official rate. Let's say they manage to succeed in tapering that down to $100 billion a month or $80 billion a month. What I think is going to happen is they'll halt the process, and I think before Biden finishes his term, the Fed will be buying $200 billion a month, maybe more than that. And the reason they're going to do that is because government spending is exploding, but the willingness of foreigners to finance that spending through private loans is diminishing. Who wants to loan all this money to the U.S. Treasury at such ridiculously low interest rates, especially with inflation accelerating? Real rates are plunging, and so the Fed is running out of buyers for treasuries. And so therefore, the only way to sustain the spending is for the Fed to get more involved and to buy even more bonds than it's buying now. And so it can't do that without expanding the size of the QE program. And that's exactly what it's going to do.
Any chance Powell may raise rates even without a taper?
No, rate hikes are not even on the horizon right now. But I think eventually Powell will be forced to raise rates very reluctantly, because the dollar is going to be imploding and consumer prices are going to be exploding. But even when the Fed finally gets around to raising rates, it will be too little too late, because real interest rates will still be, solidly negative, even if the Fed nudges up the nominal rate. But the problem is, if they nudge the nominal rate up too high, the government doesn't have the ability to pay. And so that's the predicament that the Fed is in. The only way the government could pay its debts is for the Fed to monetize them. But as the Fed monetizes the debts, it creates even more inflation.
We're even seeing Treasury yields on the rise. It's gone up, I believe, some 20 basis points since that FOMC meeting. Should yields continue to rise, what would that be signaling to the markets?
Well, I don't know what it signals to the markets, but what it's actually signaling is higher inflation. These higher inflation premiums are being built into the yield curve. I think it also shows a declining confidence in the ability to repay the debt with money that hasn't been debased. So it's a sign of inflation, a weak dollar to come, loss of confidence in the U.S. It's really reflecting a lot of negative things, and I think a lot of traders are whistling past the graveyard when they fail to contemplate the significance of what they're seeing.
And week in, week out, we're seeing that repo market, or reverse repo market, I should say, just continuously growing. Why are we seeing that daily reverse repo number grow? And what is the Fed doing with asset-backed and mortgage-backed securities?
The Fed is taking them on their books because they don't want to see the rates rise. The fact that the Fed is so active in the market is an indication that there is not sufficient private demand to keep interest rates this low. And so the Fed is interfering with the market and printing more money to buy up the bonds for which there is not sufficient private sector demand. Now, this is a mistake because the private sector is trying to send a message that there's too much debt and that interest rates need to rise to curtail that. But the Federal Reserve doesn't want the market to function. The Fed wants to distort the market so it allows excess borrowing to continue so it can keep the bubbles from deflating. It wants to prop up the stock market, the real estate market, the bond market, and it wants to enable the government to continue to spend money that it doesn't have, and so it interferes in the market. But this is doing grave damage to the structure of the U.S. economy and is going to lead to a much worse economic implosion than the 2008 financial crisis, with far greater implications for the dollar, for the cost of living and the standard of living of every American.
The Fed is basically throwing money in the system, and now with the reverse repos, they're trying to throw it in the furnace and burn out all this excess cash.
No, they are supplying the market. They are with cash. They're providing credit that the private sector doesn't have. So they're coming into the market and intervening to affect an outcome that is opposite of what a free market would produce.
Peter, why is it so hard to do the inevitable and just simply raise the debt ceiling? I mean, why even care now?
Well, obviously, it's not hard. I mean, they've done it, I don't know, 70 times or so since 1960. I forget how many times they've done it since we first had the debt ceiling. It came about in 1917, so it wasn't something that was always there. It was the result of the creation of the Federal Reserve and the potential moral hazard that created for the government borrowing too much money. So the debt ceiling was put in specifically to prevent the Fed, the Treasury, from abusing the Federal Reserve and using the Fed's ability to create money and buy treasuries to run up too much debt. So they imposed a ceiling. The problem with the ceiling is that it can be raised. Otherwise, it would have worked. But giving Congress the ability to raise the ceiling, that's the problem. And of course, the debt ceiling is not part of the problem. It's part of the solution. Unfortunately, it's never used because we keep raising it. The real problem is the debt. And, I'm very frustrated when I hear these politicians say that we need to raise the debt ceiling so we can pay our bills. The reason that we have all this debt is because we don't pay our bills. And the reason we want to raise the debt ceiling is so we can keep borrowing money instead of paying our bills. I mean, paying the bills is easy. Just write the checks. But we can't write the checks because we don't have the money. So we need to borrow more money so we can keep this Ponzi scheme going. And in fact, they admit it's a Ponzi scheme because listening to their testimony today, everybody says if we don't raise the debt ceiling, we're going to default on the money we've already borrowed. That is an admission that the ability to pay old lenders rests completely on the ability to borrow more money from new lenders. That is the very definition of a Ponzi scheme. And the government is admitting that it is running the world's biggest Ponzi scheme. And, to show you how little it understands about Ponzi schemes is the key to a Ponzi scheme is to keep it secret. You don't let the people know you're running a Ponzi scheme because, that's Ponzi 101. But of course, we've made that mistake. We're telling everybody it's a Ponzi scheme. The crazy thing is the lenders haven't realized what's going on. Eventually they will, and they're going to dump their treasuries and they're going to dump their US dollars. And that's when we have a real problem. It's not the lending debt ceiling. It's going to be the lenders that decide that they're going to impose their own ceiling on how much they're willing to lend, which I think will be nothing. And then the only lender will be the Fed, which means all the debt will be monetized, which means the inflation that we're seeing now is just the tip of a huge iceberg. The platinum coin idea just will, drop the pretense that we have any kind of fiscal responsibility or any kind of independent Fed, because if the Treasury can just mint platinum coins and claim they're worth $1 trillion, then they're basically saying we're a banana republic. I mean, we don't have a real independent central bank. Congress just creates money out of thin air as much as it wants with absolutely no restrictions. And when they do that, there's no ability to shrink the money supply because there's no assets for the Fed to sell. All it's got is an ounce of platinum. And so if we're just going to keep on minting $1 trillion 1 ounce platinum coins, that is a recipe for disaster. Because once the inflation genie really gets out of the bottle, the Fed has zero tools to put it back in. And so you get into that dynamic that could lead to hyperinflation and the complete destruction of U.S. currency.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information. And it helps us spread that message. Sharing is caring. And now, let's continue.
What to do in such a situation? Inform yourself and keep your financial education strong. We from the Compact Group offer our loyal subscribers a free educational portal with first-hand monetary, financial, and economic knowledge. Enter our invite-only Insider Club by clicking the link below. You will get access to first-class information far earlier than the rest. We have prepared a special deal for all our members where you can access a giant pool of Robert Kiyosaki's financial wisdom for just $1. To find out more, simply click the link below and join our Insider Club absolutely free. But there is more you can and should do. Build up several streams of income. More and more people realize that they have to take their future in their own hands, but they don't know how and where to start. We from Compact offer our Insider Club members unique opportunities. Strengthen your financial muscle and get the edge. Click the link below. Become part of our free Insider Club. No financial obligations. But there's one important thing you have to know. You have to become active. So do it now. Become active and see you on the other side.